Welcome to this week's Q&A. We've got a question from one of our viewers on the west coast of the US this week, and it's something we've been hearing from a lot of our viewers, a lot of our clients, both domestically in Australia and Australian expats living abroad. And there's been a lot of talk, especially in the Australian media, in relation to the central bank, the Reserve Bank of Australia, potentially looking to hike interest rates at their next August meeting. So this viewer has said, look, will the RBA raise interest rates? And the underlying question to that was then, I'm looking at fixed rates at the moment. Should I be fixing? I'm quite worried. I'm concerned. I don't know what's going to happen. And all I can say really is, at this point in time, I think the most prudent course of action would be to remain on a variable interest rate for most people, because most forecasters, most economists think that we're on the sort of, peak area of this current interest rates hiking cycle. And I would have to agree with that. Obviously the inflation numbers for the end of July will be pretty important for the RBA. There's still more data to come out, but if we look at what's happening globally, last week's labour force numbers from the US were pretty weak. 4.1% unemployment rate, which is a substantially higher number than, say, the middle of last year. And you've got other central banks around the world or having already started their cutting cycles. So I think the RBA will be cognizant of potential upside risks, but I still believe that there won't be enough reason for them to actually hike interest rates. And I still believe that the next move should actually be down. It will depend on data that's coming in through the course of July. But, when people are asking us these questions, they're obviously looking to make changes that could really be far longer term than potentially remaining on the sidelines on a variable rate mortgage for now and wait and see what actually happens, rather than locking in for, potentially 2, 3, 4, 5 years on a fixed rate to, as it were, buy insurance and get some peace of mind that they're going to pay a certain amount. But that would obviously not be so conducive to peace of mind if rates did come down, as most people anticipate, over the following or the ensuing 12 to 15 months. And I believe that is going to be the case. It's going to happen globally. The global economy is slowing already in certain areas, and I think Australia is not going to be able to escape that. Added to that, of course, we have things like commodity prices, which are already down over 25% from over a year ago. I think the labour force numbers in Australia are going to impact things, and they're going to weaken as time goes on. Consumer sentiment had an uptick over last month, but is still in very depressed levels. So I think there's a lot of pressure, not just on the Australian economy, on many developed economies, and I think that will see the cyclicality of the interest rate cycle come to pass, and rates will then continue to decline. So a long answer, I suppose, but I would say that for most people, remaining on a variable rate interest rate at this point in time would be the more prudent thing to do. But look, if you need any help with this, in your own sort of circumstances, then please reach out. We'll have somebody contact you, email you or call you, help you with your own set of circumstances. And if you've just found this of interest from a general viewpoint, please subscribe to our YouTube channel and click like. We'll keep you up to date. I'm Andrew Unterweger, and I'll see you at the next Q&A.